is my full current day trading strategy as of July 22nd, 2025. So this is going to be covering my my intraday day trading strategy, where I will be taking trades. I will be executing trades on the 1 minute market. The first things I want to clarify is that I will be risking 1% on one trade every single day at maximum. And I can risk as little as 0.5%, but the maximum I'm willing to risk in one day is 1% on one trade. I will not be taking multiple trades, and I will not be taking more than 1% risk. I also want to mention what pairs what I will be taking these trades on. Number one, currently I'm on the NASDAQ right now. This is what I use for replay trading because it seems to obey price action rules a bit better, and I don't really have the hindsight bias that I do for USD CAD. But I will be taking these trades on the USD CAD, which is not currently listed right now, but that's what I will be taking my trades on from now on until at least I get good and profitable at that. Then I will add these other trades, these other pairs, which I'm using just for practice, so I don't get too much hindsight bias on USD CAD, such as Bitcoin, S&P 500, and Nasdaq. Two prerequisites I'll have before beginning trading in one day is no high impact news on Forex Factory. This would be CPI, PPI, NFP, and FOMC. All four of those are red flags. I'm not trading on those days. I'll also be trading on New York and London overlap, never on the Tokyo session or interset in between sessions. Will do is I will find bias. I will wait for both the 15-minute and the 1 hour to be aligned in a trend. So right now, currently, I'm on the daily. We are bullish on the daily right here. And if I were to go on the weekly, we are also bullish on the weekly. So in other words, I won't be taking a trade hypothetically if the daily and the weekly were contradicting each other. So what I'm looking for is both of those, and ideally the 1 minute and the 4 hour. So all four of those ideally to be aligned in order to take a trade in that direction. That will determine the direction which I take a trade into. Then after that, I will mark out the swing lows, which in this case would be right here, right here, right here. I'll mark all these out and wait for retracements. Something I like about this strategy a lot is it mirrors support and resistance in some ways, where a lot of these swing lows seem to be pretty much very close to in their own sort of levels. Light or there's a bit of overlap here, but for the most part, it looks like they sort of seem to form their own levels and seem to respect that. And that's something I like about the strategy is it takes the support and resistance concept and smart money ICT concepts and joins them together and sort of works with the unifying truth of or the unifying nature of the markets in order to take trades. And that's what I like about this strategy so much. So once I get retracement right here, for example, what I would do is mark out not only equilibrium, but make sure that this hits a break of structure. And what I mean by break of structure is a, in this case, because I'd be longing here, a bullish candle, a bearish candle, that goes down, and then the third bullish candle that pushes where the body of the third bullish candle pushes above the wicks of both the red and the green candle. So it'd be all the way up here. Makes sense. That's not the best illustration, but right here, it would come, I believe, either right here on this candle or right here because price comes up, down, and then this is when price closes above this price closes above this high and this high. So the break of structure would be right here, and this is where I would long. The other thing is this is outside of equilibrium, and the thing I'm emphasizing in my new trading strategies, I'm taking out the like equilibrium being mandatory, and the reason I have that is because most of the time price retraces quite a bit. and there's usually previous areas of liquidity like up here if it was intraday trading, but this is interday trading on the Nasdaq 100. So that means usually prices as high as it's ever been because by the very nature of the Nasdaq, it's an index. It's going to keep on climbing up steadily. So on a macro time frame like this, that's really not viable. But on a micro time frame, on something like USD CAD, where price is constantly fluctuating in between pretty much two pretty far apart, but levels, it's a lot easier to find previous areas of liquidity that I can set as take profits instead of equilibrium. So I will set my stop loss 10 pips below the previous area of liquidity. ChatGPT just recommended that. I do know that from knowledge about how the markets work and from very hard, very painful and annoying experience that market makers like to trigger stop losses by pushing price below here and then running the other way with your money. So 10 pips was the chat GPT recommended amount of pips below the stop loss or like below here. So whatever that would be, I guess this is an indice, so I don't exactly know what this means. I have to learn exactly how pips, etc., work, but just put it like slightly below so that if price comes down here, which it likely will, it won't run away with all your money. Stop loss or take profits. The first take profit I'll add is at the top of equilibrium, and that'll be 1 to 1.1 to 1.5. Then once that gets hit, if that gets hit, I'm moving the stop loss up to break even. So the worst case scenario, I just either make 0.5% or just break even for the day. And then the second take profit, likely a 3 or 4 to 1 RR. Third take profit, likely at around five. And then fourth take profit is usually like, I could go on, but if I were to set a fourth take profit, that'd be like 10 or something absurd that likely wouldn't get hit. I don't exactly know how I'd divide that up. Likely I'd do 50% of my account in the first take profit, take profit probably 30%. I'm just kind of I'm just kind of making this up as I go. And then take profit three and take profit four, we both have 10% of the account each in it. That's what makes the most sense for me, so that if I end up doubling this part, as if I hit take profit one, then I can move it to break even and I could theoretically hit my stop loss and still lose nothing. So that's what makes sense for me. This this trading strategy is very similar to the TJR, like beginner trading strategy. What it does is it takes out the fair value gap, which is something I don't really understand well and something that hasn't really worked out well for me. I work much better with order blocks. It adds multiple take profits to the trade so that I can sort of diversify how much I win, and I can make sure that I don't I don't get wick or I don't get sold out of like a big take profit because I set it too high, or at the same time I sell myself short by doing a 1 to 1 when I could have done like 1 to 20 theoretically and still had a hit. And it just takes out the clutter of fair value gaps and always having equilibrium. So that's my trading strategy so far as of July 22nd, 2025. And um, I just don't know exactly what I'm going to do with this. I don't know what's going to change, what's going to stay, but for now, I think that this is enough, or this is going to make me profitable, and at least will get me to the point where I can make consistent profit. And then once I get to that point, I'll likely maybe switch it to something riskier because I know I can do it, or I'll do whatever is appropriate at that time.